Good, eve- Good evening, everyone. It gives me immense pleasure to introduce our esteemed speaker for today's session, CA Ritesh Thakkar. CA Ritesh Thakkar is a distinguished chartered accountant with over 12 years of post qualification experience in the field of taxation and finance. He began his professional journey with globally renowned firms like KPMG and EY and subsequently worked with Dhruva Advisors, spending nearly a decade with these leading organizations and gaining rich expertise in the field of taxation. Since 2024, he has been associated with CBV and Associates LLP as a director, where he currently leads a team of 15 dynamic professionals. He specializes in tax advisory and tax with extensive experience in both domestic and international taxation. Over the years, he has successfully handled several complex tax matters and has assisted senior counsels in tax controversies before various judicial forums, including the Honorable Supreme Court of India. With his vast experience and deep understanding for ever evolving tax landscape, we are indeed privileged to have him with us today to share his insight on the topic emerging landscape in tax and finance. Dear students, please join me in extending warm and enthusiastic welcome to CA Ritesh Thakkar.
Thank you so much, Rachna. And that was indeed a quite overwhelming introduction that you gave me. So I have been given this topic, which is obviously dear and close to my heart, of talking to you young professionals about the emerging tax landscape in India. And I have come back to this forum of HR College after almost a decade, where earlier after qualification, I had seen young people such as y'all and had taught the SY and TY courses, the topic of taxation and accounts. So almost after a decade, I'm back to HR College, and thank you so much for giving me that opportunity to the faculty. Before we get into the future of the emerging tax landscape, let's spend some time understanding the past and the present of taxation, not just in India, but throughout the globe. Why are we talking about taxes to people in FIJC? Why are we talking about taxes at all? Because it is the hot topic in any boardroom discussion. Just imagine, I'm sure you all are aware about what a tax is, right? There is a indirect tax which is levied on any purchase that we make, such as a mobile phone, a television, a packet of biscuits, anything. That will be the GST as we commonly know it. And there will be a direct tax, which is the income tax, which we pay on our income. I earn ₹100 salary, of which the government will take its share of ₹30 odd. And that is where it becomes such a hot boardroom discussion amongst any finance professional or even businessman, that if we are investing a particular money in any jurisdiction, or if we are earning ₹100 or ₹1,000, what are the taxes? What is the tax cost that we are paying on that? Because ultimately, what would be left is the residual post-tax income, which we can either take home as profits or distribute to our shareholders. Therefore, it's very important to understand how tax functions, what an integral part of the boardroom ecosystem and discussion it plays. Let's go back about 100 years. In 1922, India got its very first income tax act. Until then, we were governed by the British era, which ran up to 1961. So almost 40 years later, we realized that a lot of the provisions that were there in the 1922 Income Tax Act were either redundant or needed a lot of refinement, and therefore came in the Income Tax Act 1961, which ran its race until 2025. And 63 years later, we decided that we needed another Income Tax Act. Was this overnight? No. It took over a decade in the making, and the announcement finally came in 2024 that in the next 6 months, with the new government, with the government spending its third term in July 2024, when we had the budget, it was announced that within the next 6 months there would be tabled a bill, and that bill would then go through both the parliaments, the lower house and the upper house of the parliament, get the president's assent, and then become what we now know as the Income Tax Act 2025. So 63 years later, 64 years later, we now have a new Income Tax Act, which is effected from the 1st of April 2026. So anybody looking at any transaction post 1st of April 2026 will now have to refer to what we know as the Income Tax Act 2025. Whatever transactions were done in the past prior to 31st March 2026 will still continue to be governed by the Income Tax Act 1961, even if it is relating to any return that we need to file for our taxes. At the end of the year, for the lesser conversion, we will break it down that I earn a 100 rupee return. I earn a 100 rupees income, of which I am claiming that 20 rupees were spent to earn that 100 rupees of income, and therefore I should not be taxed on the entire 100. I take a deduction of 20 rupees, and I say that my net profit is only 80 rupees, and therefore I offer that to the tax. This comes by way of a statement, which I call my income tax return, and this return goes year on year to the government. So this is in terms of the income tax compliances that one has to undertake, and these will be continue to be governed by the older Income Tax Act. Procedurally, it is one of the most complex acts. Taxes by itself is definitely not easy. You have the genius Albert Einstein say that the most complex thing in the world is the income tax, and I would also quite agree with him that even after spending almost 17 years with the income tax law, there's something new to learn every day, and that's the thrill and that's the happiness that we get in practicing this. That we are never practicing something which is dead and mundane. We are always the concepts are emerging, the litigation emerges, the interpretations emerge. Like any other law, the income tax law is subject to a plethora of interpretations, and the government will have their own set of interpretation which may benefit the government from a particular tax income perspective, and the taxpayers, or we know them as the assessees, they have their own set of interpretations where they would come to advisors and litigators like such as us to help them in their taxes. So this is pretty much about the current tax structure, how it is currently placed. The situation is emerging. You see a lot of interpretations being challenged by the tax authorities. The taxpayers, of course, have a remedy in terms of challenging these orders to a higher level. In the income tax system in India, we have a assessing officer who will look at your tax file and decide whether the taxes have been correctly paid or computed or not, whether the deductions you have taken, whether the rent you have paid, whether the salaries you have paid, whether the incomes you are offering, all of that is done correctly or not. And then he will draft a assessment order. Once that assessment order is drafted and sent to you, you have an option to either accept that order, pay the taxes additionally if any, And also, you have an option to challenge that order before the appeal authorities. In India, we have the Commissioner of Appeals as the level one authority. Then we have the Income Tax Tribunal in multiple cities as the second appellate authority. We have the High Court and the Supreme Court among that. The Supreme Court is the final say on any tax issue that exists, or any issue at all, rather. The word of the Supreme Court becomes final. Unless, of course, then we have multiple instances where the Supreme Court has taken a particular interpretation, whether in favor of revenue or the taxpayers, and then the Parliament may come back to say that this was not the intended interpretation, and they may either prospectively or retrospectively change the law. What do we mean by prospective and retrospective? If, let's say, for example, in February 2026, the Supreme Court came out with a decision that XYZ interpretation is the correct interpretation for a particular section of the Income Tax Act. The Parliament can come back and say, either by way of a budget or by way of certain notifications or circulars that they may issue, and they may say that this is not the correct interpretation and ABC is the correct interpretation. This is now the amended section from 1st of April 2026. They may also come back to say that the correct interpretation is ABC and the interpretation of this section is retrospective in nature, which is to say that right from 1st of April 1961 or 1976 or 1998, any date that they may decide that this is the interpretation to be taken right from that time, wherein they say that this is more of a clarificatory amendment. So this is more of a common thing over the past several years, and therefore taxpayers have to be extremely cautious, because just imagine you have taken a particular position in your tax return, assuming that your tax liability will be lower, and then maybe 10 years, 20 years, 30 years later, even if the Supreme Court has ruled in your favor, the Parliament may just come back to say that that is not an accepted position or an interpretation, and we are going to tax you for a position you have taken 20, 30, 40 years earlier. And this is what many of you all may know as the famous Vodafone case, wherein a retrospective tax was imposed on the taxpayers, because even the Supreme Court had ruled in Vodafone's favor, but the Parliament came back to say that this is more of a clarification that we are bringing in, and you have to pay taxes right from 1961 and 1976 onwards. While taking tax positions, and therefore one must tread a little cautiously given the current tax landscape. In the future, what holds for us? We have AI coming in terms of tax advice, in terms of tax compliances. I'm sorry, before I move on to the future, if does anybody have any questions or any comments? I'd like this to be a open session. You can put it in the chat box or raise your hand and I'll take up the question, if at all. Anybody has any comments so far? All right, so we'll move to the future of what holds in store now. We have AI coming in. We have tax compliances, which were earlier done by traditional chartered accountant firms by way of filing of your returns, by going to the tax office and seeking filing certain letters or submissions before the revenue authorities. Your withholding taxes are now being taken care of. What we know as TDS is now being taken care of by a lot of AI tools. The dangers of using AI is manifold. It's very, very dangerous. to completely just rely on an AI tool and your submission going unchecked or your compliance is going unchecked by any human intervention, extremely dangerous. We have Bangalore tribunals, we have Karnataka High Court, we have Bombay High Court, and even the Supreme Court coming down very heavily on certain cases or decisions that were cited by both the taxpayers and the revenue authorities, which did not even exist. So just imagine you have made a written submission to a high court, and in that you have cited that the Delhi High Court has ruled in ABC's case that this is the correct proposition. The Guwahati High Court has ruled in XYZ's case that this is the correct proposition. And ABC and XYZ cases don't even exist. And this is the danger of AI tools working up and just hallucinating, as we commonly know it. In terms of tax compliances, also, we have so many compliances that have gone array. They have cited wrong provisions of the Act. They have filed their clients' returns under the wrong sections, which ultimately leads to disbarment. You will not be allowed your losses. So many implications. There'll be tax penalties slapped on you. So one has to be very careful. One can use AI as a tool, which is what it should be. But one should not get handicapped by AI or completely rely on it. It should not go unchecked. One can definitely use it as a base starting point. But my advice to young professionals or to young students like yours, even in your college projects, would be please do not completely rely on AI. Please use it as an effective tool for your submissions or even as a matter of learning. Please cross verify what AI is doing or throwing up to you. Um, Moving to the global tax landscape, we have not only India, of course, we have countries across the world which impose taxes on individuals on their corporations. We have Apple, which is probably registered in another country and is paying lesser than its fair share of taxes. We have certain corporations which are taxed very heavily in high tax paying jurisdictions in Europe. And that is where a concept of a minimum tax rate comes in. We have heard of this concept called tax havens, where a lot of people go through Mauritius, through Cyprus, Cayman Islands, Dubai, Singapore, because their tax rates are slightly lesser than in countries like US, India, in UK. So we see these people going to tax havens or tax friendly jurisdictions. And that's where the concept of a global minimum tax comes in. There is an organization called the Organization for Economic Cooperation and Development, the OECD, and we also have the UN, which is the United Nations. These two largely frame the policies for what an effective tax regime should look like. And they have prescribed that there should be a minimum tax rate which should be applicable to global corporations. Let's break this down. Let's say Amazon is having its entities in the US, UK, India, Malta, Cyprus, Cayman Islands. Now, what the global minimum tax effectively prescribes that there should be a minimum tax, let's say 15%. And therefore, countries such as Dubai, the UAE, which prescribes a minimum tax rate of 9%, if Amazon is doing business out there, they ought to pay or is registered out there, they ought to pay a 6% additional tax. That is very broadly what the OECD and UN what the global minimum tax rate has been prescribed. Why do we need this? Because as I just mentioned, there are many corporations which will be registered in a Bermuda or in a Cayman Islands or Mauritius, and then they will say that we are registered out here, we are residents of this association of this country, and we are paying taxes on base of our residence. We will not pay taxes in high tax paying in high taxing nations, and that will lead to a erosion of tax in a base country. Therefore, we have that global minimum tax rate that has been prescribed. For budding individuals like you, such as you all, what is the future? What lies in store for us? We have opportunities and advice. If I were to break down tax, it would broadly comprise of three baskets. One would be the advisory function, where a tax corporation would come to you, a large conglomerate would come to you and ask you on complex tax matters that what would be the correct um, tax position to be taken on this particular income, whether it should be offered to tax or not, because it may be an income which is a capital in nature, such as shares. If I sell shares or stocks, the tax rates would be different, the governing sections would be different, the entire provision, the chapters would be extremely different from conducting of a business trade. If I earn bank interest, the interest sections would be very, very different. And I'm just babying it down, but it's far more complex than that. If I have to take particular deductions, how do I do it? If I'm an Indian company, I want to do business with a Singapore entity, which is located probably in Singapore, but they want the goods to be shipped to their customers in US. What should I look at? Whether I should look at the treaty with US or with Singapore? If I want to set up a subsidiary in UK and conduct business with a Norwegian entity, how do I go about my structuring of the entities? What will be the regulatory implications of that? We have the RBI, which looks at foreign exchange in India and any overseas investment that we make, or any money that we get by way of capital from outside India, which is known as FDI very commonly, which is foreign direct investment coming into India, is regulated by the RBI. And what are the challenges? What are the permissible investments that we can make? Or what is the permissible sector in which we can get investments? All these challenges, all these roadblocks need to be seen and navigated. If I'm doing business with an associated enterprise or a related party, it can also so happen that if today the India tax rate is 30% and Singapore tax rate is 17%, I may want to shift a large part of my profits to my Singapore entity. And if it is an associated enterprise, it will be governed by a provision called the transfer pricing provisions, where there are transactions between related parties, and you have to then test. The chartered accountants, such as ours, will issue reports which are relied upon by the government, which is called a transfer pricing study. And we will test whether these transactions are at an arm's length price, which effectively means to say that it is a transaction which, if I would have done with an unrelated party also, I would have either sold the goods or offered my services at a same or similar price, or I would have purchased the goods or brought in or obtained services at a same or similar price. I am not diverting my profits to another enterprise only because it is related to me or only because it is associated with me, because ultimately the profit should be under the same umbrella, but in a low tax paying jurisdiction. And therefore, the role of a tax professional in such global transaction scenarios becomes extremely important. We also have the second bucket of litigation, where first we made this advice. We gave the client this position. Now, what if that position is not accepted by the tax authorities? As I mentioned, there are appeal mechanisms which you can go to. The doors will not shut with the first authority itself. You may not have to paying up all the taxes. If they disregard your return to say that you have earned 100 rupees of income, and they may say that no, that 100 rupees is arrived after taking 9,000 rupees of deductions. But in our view, that 1,000 rupees of deduction is not permissible. We are going to assess your income at 1,000 rupees. On that 1,000 rupees, land up paying 300 more of taxes. And it so often happens that assessments are made at an income which is 2x, 3x, 10x, or sometimes even 100x. It's not uncommon for the tax authorities to sometimes assess the income a lot more than what is actually put forward by the taxpayer. You then go into what we call litigation, where chartered accountants, tax lawyers, tax professionals will help represent the taxpayers before these appellate authorities and challenge the orders passed by the lower authorities. It then goes on to the tribunal, the High Court, and Supreme Court. Before the High Court and Supreme Court, only lawyers are allowed to represent someone holding a valid license to act as a lawyer. And chartered accountants can assist the lawyers, but you definitely need not just a law degree but a license to actually represent before the High Court and Supreme Court. And there are separate exams other than the LLB exams that you have to pass post that. In terms of the third basket, we are looking at compliances, which, as I mentioned, are largely taken over by AI now. But again, we are at a very nascent stage in in the AI landscape itself. It's been around for the last 3 to 5 years, more heavily than earlier. But if I were to look at how well it has developed, how well it is handling tax compliances, the answer would be not so great at this moment. Of course, to add to it, we have a new income tax act coming in with 536 sections. A lot of people haven't still been able to get a grip of how those are to be interpreted, and therefore training the AI itself is probably going to take some more time, and then for AI to master that may take even more time. And in terms of compliances, I would say it may not obviously be a great breadwinner for anybody, but compliances come as a part and parcel of what you would otherwise want to do, which is advise your clients on the correct tax positions, also assist them in litigation if you feel that thrill of challenging those orders and winning before a regulatory or a tribunal authority, before a court you get to represent. There is no bar on representing before the tribunal in terms of qualification. So a chartered accountant can represent his or her client before the income tax tribunal. And this is before for income tax. For GST, we have separate appellate mechanisms. The GST law, as you probably would have heard, has shaped up in 2017. So again, in terms of the overall landscape, 9 years is a small blip. It's a very small speck, and it's just shaping up. In fact, the GST appellate tribunal has been notified only about a year back. So we still have a long way to go. exciting times in terms of anybody who wants to shape up their career in their in the tax in the tax field, and a lot happening, not just in in India with respect to domestic taxation, but even globally. In India, in fact, we have the international tax landscape also shaping up. And when I say domestic and international, I mean that if you are an Indian company doing business in India, that's when the laws of domestic taxation will apply to you. If you are an Indian company or either operating outside India through a branch, subsidiary, etc., or you have transactions with any international entity, which in today's day and age almost everyone does, then you come into the slightly more complex web of international taxation, where you're looking at tax treaties signed between India and another nation. You also have the multilateral instrument, which was a defining moment in the tax world, where our 3,000 treaties between two nations were almost submerged were almost merged into one document called the multilateral instrument. And our ex-finance minister, late Sri Arun Jaitley, had gone on to sign that document from India's behalf, where we agreed that almost different treaties having different languages will now be governed by this one single document called the MLI, or the multilateral instrument. And that is how the international tax landscape is shaping up today. We also have foreign enterprises who may want to set up shop in India. Until 15 years back, there was no Uber in India. Until 12 years back, there was no Amazon in India. And these have just entered the Indian markets. How do they operate? Do they have a subsidiary in India? Who are their largest resellers? Are they also associated with Amazon? When Amazon brings in this money in India, are they bound to also adhere to certain regulations, sectoral regulations, which an e-commerce operator has to abide by, which are prescribed by the RBI? The tax and regulatory landscape is indeed a large question more than answers. So almost every day you have something new coming up, something new to look forward to. When we talk about international tax, the interpretations taken by the taxpayers, like I mentioned, 10 years, 20 years back, may not even hold true today. We are seeing this emerging trend of the higher authorities taking a very strict um, position to say that the law may be saying X and Y, but if you're now abusing the law on the basis of that strict interpretation, you're now using a colorable device to evade taxes. The sovereignty of a nation cannot be compromised. Each nation is entitled to its fair share of taxes, because it is with the tax that nation building happens. That's what is called the budget, right? The budget is nothing but a budget. It's a statement that the finance minister will draw, that this is the income or this is the receipts. The receipts, the predominant part of it would be taxes. And this is how we intend to spend these receipts: on our defense, on our railways, on our infrastructure, roads, highways, cities. That's how we spend the money as a nation on the development of the country. And the higher authorities have taken almost what I can safely call a no nonsense approach. That if corporations and conglomerates think that they can evade taxes by using certain colorable devices or certain loopholes in the law, that will not be tolerated. And therefore, it becomes extremely important to marry what is the interpretation of the law along with what is the practical reality or the intended you know what was the intention of the lawmakers at that time. The intention of the lawmakers probably could not be that you don't pay any taxes at all anywhere. In terms of developing nations, we may give certain concessions. Say for example, today when the India US treaty or the India UK treaty would have been signed 35, 40 years back, US would have been a developed nation and India would have been a developing nation. And the purpose and intent to give certain concessions to India would have been very, very different from what today's scenario is. In fact, today India has overtaken UK in terms of its GDP. So the situation has almost kind of flipped to its head. And can those same concessions or tax breaks be afforded or accorded to India at this moment to say that the corporations registered outside India need not pay taxes while doing transactions with India or vice versa? The answer is probably no. So a lot of these regulatory developments have come in, and it's very interesting to see how the judiciary and the lawmakers have both, taken this approach. With this, I would probably leave the floor open to any questions that anybody may have. Happy to take on any questions, any comments with respect to what probably may hold in terms of the future for career opportunities. I think I've elaborated it a bit, but happy to take on anything in terms of your courses.
Students, please unmute or ask questions in the chat box. Sir is here to help you guys out.
Okay, I'll actually just probably say a few things more additionally in terms of um, your academics. You'll obviously know that there is a course called the Chartered Accountancy course, which is CA, and most commerce people end up doing either CA or LLB if they are looking at a future in any legal or law related fields or tax related fields. And the CA course can be done by anybody who's, anybody who's 18 plus wants to start doing CA. You'll have a three-layer exam that you all will have to clear. Not an easy course, but the exams will definitely be worth it. The tests that the Institute of Chartered Accountants will take will definitely be worth it at the end. Should you all want to practice in tax or finance. You all also have international tax courses which are offered by institutes in Netherlands, which even the Institute of Chartered Accountants will now offer a diploma in international tax. So once you all are done with your CA or even otherwise, if you all just want to be regular tax practitioners and not chartered accountants, you all can do this diploma in international tax. And if you all want to just represent your clients being tax practitioners, that can be done. It is not necessary that you have to do chartered accountancy, but the title of a CA, the exams that you all will give, the learnings that you all will get will be incomparable. So if you want to actually practice in tax, it is highly advisable that you do CA as a course. You will obviously have other avenues, but a CA title will be more recognized by your clients. The learnings you all will get from the course will definitely be an immense value add. I have a few questions in the chat box, so I'll take that up. Hi Neha, your question is, in wealth management, does tax play a very important role? Absolutely great question. Extremely great, extremely large role. I'll take the example of United States, where example a person has a succession planning to be done, and their taxes are a large bill of their estate, and therefore they have something called as an estate tax. If I transpose this to India, today a very wealthy individual may feel he has 100 crores of assets, but if he wants to give that off to his wife or children or plan his succession, he has to consider what may be the implications of taxes. Otherwise, you're not landing up giving 100, you're landing up giving 70. If you were to probably invest in certain funds while you are living, and you feel that on the 350th day it has ballooned up in value, and you will end up selling it without waiting for maybe 15, 20 more days, you may land up facing a very large tax bill as compared to what bill you would have put if you would have sold it after 20 days. Different types of assets attract different taxes, and therefore for investing in a particular class of asset also, or holding on to a particular asset for a particular duration, will be a question, all from a tax perspective. Your returns may be almost similar if I purchased something on 24th of June 2025 and I'm holding it and selling it today, versus if I would have sold it yesterday, the tax will be completely different. And the difference in the rate of tax could be as high as 18 to 20%. So just imagine you feel you're going to take home 100 post tax, but you're actually taking home only 80, all because you didn't hold on to that asset for one more day. So tax plays an extremely important role in wealth management and wealth building, as well as wealth being passed on to the next generation. So I hope that answers your question, Neha. Vedant has a question where he's asking, what does the day-to-day work actually look like for a CA compared to what is taught in the textbooks? It's actually not too different in terms of what is your initial days of your career with what it will look like. Let me elaborate. Maybe 20 years back when I started my CA journey, the textbooks were not very aligned with what was being practiced. The Institute of Chartered Accountants has actually taken that into cognizance and aligned the textbooks with the day-to-day life of a CA practitioner as far as possible. But what will happen in reality, Vedant, is that as you grow from your articleship internship days to that of a freshly qualified CA, to then becoming a manager, senior manager, director, partner in your organization, your day will look very different. From a business perspective, also from your client expectation perspective, also, and then what is taught in your CA textbooks in terms of the taxes, how you are computing, it will be very different. Again, as I mentioned, your CA textbooks have tried to take great care of it. Your client will come to you with a query that, I want to make an investment in Germany. And that German business will probably do manufacturing of solar panels. Now you will say, okay, let me analyze the tax implications. Investment can be done, it has no tax implications. But you have to also take into consideration the GST aspect into it. Do I want to make an investment in my German subsidiary? Will I have transactions with them? The transfer pricing angle comes in. You also have the regulatory FEMA angle coming in, which the RBI will probably look into and say this is probably an overseas investment, not permissible. So a lot of these angles will then come in beyond the textbooks because it's a ever changing tax landscape. Today, the government, what they said 6 years back, or probably 1 year back, let's rewind to June of 2025. And the government said that you obviously could play games online. Now you have an online gaming ban, and that industry is entirely wiped out in a matter of a week in August of 2025. So it's a very different landscape when you keep moving year on year. So your life will change post that. Many, many years later, your life will change.
Okay, sir. Thank you.
Yeah. You Aditya, your question is about GST courses. Yes, there are courses like I mentioned, the Institute of Chartered Accountant of India. They do have these courses on GST. Again, it would be recommended if you want to become a GST professional, you go in for chartered accountancy with a specialization in GST, and then you can do those add-on courses that the ICAI does offer. You also have leading tax platforms such as Tax Sutra and Tax Man with a double N at the end, which offer seminars at nominal rates, which also offer beginners courses. You should keep your eyes out for attending seminars by the ICAI also, which have veteran tax professionals giving lectures. So if you want to probably start your journey with these beginners courses, you can do that. There's an unnamed query which asks about professional courses manageable with college. Foundation can be possible, but precisely enters and higher level. It's a tough ask, yes. To address your question transparently, it will be difficult, not impossible. I've done it, so have thousands of others. It takes hard work. It will require to be very dedicated. So yes, it is manageable. The higher levels also. CA, the course practically will take a fair bit of your enjoyment out, but the rewards are definitely worth it. Others has a question of how does the tax evasion system work amidst a clearly defined law in each specific tax? Of course, there are loopholes. Like I mentioned, many people strictly interpret a certain provision and then they try to dance their way around it. It does work. Of course, they sometimes get caught in the eyes of the regulators, and many times they even have favorable rulings in their cases, wherein it has been held that if you are planning your taxes, a tax planning exercise is definitely permissible. Since India has borrowed much of its provisions from the UK common law, we also rely on certain decisions which are pronounced in the UK courts, in their House of Lords, etc. So we have a classic case of 1937 in the Dukes of Westminster, which says that each individual has the fundamental constitutional liberty to plan his own taxes. And tax planning and tax evasion are very different things. So many people act cute and say that we are planning our taxes, we aren't evading it. Sanya has a question. What skills create the most value for tax professionals in the next 10 years? Very good question. Um, be extremely updated with respect to law. I don't think AI will ever replace any job in its entirety, a white collared, high skill job. I'm not talking about the compliances. I'm not talking about laborious jobs. I'm talking about a high value mind job where your client will recruit your services for your intelligence, and human intelligence and artificial intelligence will always have a mismatch. Having said that, AI should be used as a tool, because 10 years later, you would want to rather concentrate on skills, on managing people, on business, rather than preparing and drafting of submissions or drafting of opinions. That's something that can be left to your team. Your team can take base level AI into account, but definitely AI is not replacing human beings for the foreseeable future, at least 10 years. Um, you can go in with a CA course along with some business development workshops, probably in the future. Hansika has a question: which skills are a must for someone who wants to make a career in finance? I think I've already answered that a little bit ahead. Professional courses good to pursue in an AI-driven future. I would say tax for sure, and even a law degree to a great uh, extent would be good to have. If not professional courses, how can we make strong career with which skills? Um, Professional courses related to corporate finance, you can go in for a CFA that is done by the US authorities. A CFA is a highly recognized course. You will have global recognition. It's not just limited to India. Thoughts relating to quant trading, I think I will stop at this. Um, yeah, all right. Thank you so much, everyone, um, for your time, and any other questions that you all may have, I would be happy to take them. Please let the faculty at HR know, and I would be happy to answer all your questions offline. Thank you so much for your time today, gentlemen and ladies. It's been a pleasure talking to you all.
Thank you very much, sir.
Yeah. All right.
So,
Bye-bye.
as we come to the end of this enlightening session, it is my privilege to propose the vote of thanks. On behalf of HSNC University and HR College of Commerce and Economics, I extend our heartfelt gratitude to CA Ritesh Thakkar, sir, for sharing his invaluable insights on the emerging landscape in tax and finance. Sir, your expertise, practical examples, and thought provoking perspectives have certainly broadened our understanding of the evolving financial and taxation ecosystem. Your words have not only enriched our knowledge, but also inspired our students to explore the vast opportunities in this dynamic field. Thank you, sir, for taking time out, taking out your valuable time and making this session truly memorable. I would also like to express my sincere gratitude to our respected principal, Dr. Pooja Ramchandani ma'am, for her constant encouragement and visionary leadership, which continually motivates us to organize such enriching academic initiatives. Our heartfelt thanks to Vice Principal Dr. Rani Tyagi ma'am and Dr. Jasveer Sodhi ma'am for their support and guidance in making such sessions a grand success. I would also like to thank all the coordinators, co-coordinators, faculty members, and the entire organizing team for working tirelessly behind the scenes to ensure that this session is conducted seamlessly and successfully. Lastly, a vote of thanks would be certainly incomplete without acknowledging our wonderful audience, the first year students. Thank you for being such a patient and enthusiastic listeners, for actively participating, asking insightful questions, and engaging wholeheartedly throughout the sessions. Your enthusiasm truly adds meaning and energy to this interaction. Thank you, everyone. Have a nice day ahead.
Thank you all, and wish you all the best and an illustrious career ahead. Thank you, and see you all soon.
Thank you, sir. Thank you.
Thank you. Bye bye.